If you're already donating money to church or charity, this is going to be an amazing strategy because all it takes is a couple extra steps in order to get more favorable tax treatment. Let's say it takes them 4 years to implement this entire strategy. They're going to save $15,000, $20,000 in taxes. If you have a taxable brokerage account and you're not doing it in this tax efficient manner, you are doing yourself a disservice. You are losing money in taxes. You could be saving more money in taxes. Welcome back to the Learn Like a CPA podcast. I'm your host, Ryan Bakey, and today we're going to be talking about something that's come up a lot recently in client conversations and discussions. And what I like about this strategy the most is that you're already doing 90% of the work. You might as well as do it in a more tax efficient manner. And what I'm talking about is charitable giving inside of your taxable brokerage account. So charitable giving inside of your taxable brokerage account, who is this for? So this is going to be for you if you have a taxable brokerage account and if you're already giving a good amount of money to charity every year. Maybe you're giving $2,000, $3,000, $10,000, $15,000 a year to charity, and you have a taxable brokerage account. This account's going to be for you. Now, let me set some parameters on this, because what ultimately happens is that when you have a taxable brokerage account, you own stocks, right? And what you're able to do with those is, instead of having to pay capital gains on those stocks, you're able to give away the appreciated stock to a church or charity of your choice or a fund and not have to pay taxes on that appreciated stock. So you're going to get a...
Real quick, guys, if you could think about how you found this podcast, maybe it was on Facebook, Instagram, maybe somebody shared it with you. I don't run ads for the show or have sponsorships, so the only way this grows is through word of mouth. If this was valuable for you in any way, the only ask that I can make is that you share it with somebody else. Pass it on to the next person whose investing journey or business can be changed by listening to the show. Much love, guys, and let's get into the episode.
So you're going to get a tax deduction, the same deduction that you would have gotten if you would have paid cash, but you get to reduce your overall capital gain exposure. So best explained by an example, right? So let's say I'm in a 30% tax bracket, and I normally contribute $10,000 a year to charity or church. So the tax deduction that I'm going to get from that, I'm going to get a $10,000 deduction at a 30% tax rate. It's going to save me donating $10,000 a year to church or charity is going to save me $3,000 a year in taxes. That's how much I'm saving in taxes. Okay. What I'm able to do, and let's take a step back. So let's say I'm doing that already. I'm making cash or check donations. What you're able to do is you're able to donate your appreciated stock to church or charity, and you're able to get the same tax deduction for that. And you're able to reduce your capital gain exposure over your lifetime. So what I mean by that is, let's say I have a brokerage account where the fair market value of the account, I'm just going to abbreviate FMV for short, is, let's say it's $200,000 is the fair market value. But my cost basis, the amount of money that I actually contribute to the account, let's say my cost basis is only $100,000. So I have a capital gain. If I was to sell this account tomorrow, I would have a capital gain on the difference between 200 and 100, which would be $100,000. And let's assume that I'm in the 20% capital gain bracket. Great. Well, I would be paying, if I was to sell it tomorrow, I would be paying $20,000 in taxes on that because I'm in a 20% tax bracket. So at the end of the day, if I was to liquidate that account, obviously I would, it's worth $200,000, but hey, I got to pay $20,000 in taxes. So now I only have $180,000. What you're able to do, and this is going to take a few years, it's going to be a long-term strategy, but you're able to donate the appreciated stock from this account to a church or charity of your choice and get a tax deduction for that. So the way this works is, let's say my fair market value is $200K. And again, my cost basis is $100K. I'm skimming off the top of that $200K. So I'm going to donate $10,000 to a church or charity of my choice. So now my fair market value of the account is $190K, right? Because I took $10,000 off of the top and I donated it. And guess what? I get the same tax deduction that I would have gotten if I would have paid cash or check to the church. So what I'm doing here is, now my if I was to sell this account, my capital gain is only on $90,000 because the fair market value of my brokerage account is now $190,000 and my cost basis is $100,000. So if I was to sell that tomorrow, I would only pay capital gains on 90K instead of before I was paying capital gains on 100K. But there's more to this strategy because what you should be doing is you're going to take that same $10,000 that you otherwise would have contributed either cash or check, and you're going to replenish your brokerage account with that 10K. So the 10K that you would have sent via cash or check, you're going to replenish that brokerage account. So now your cost basis in the brokerage account is going to be $110,000. The fair market value of the account is going to be $190,000. And if you were to sell that account tomorrow, you would only pay capital gains on $80,000. So you're going to do this strategy every single year until the fair market value of your brokerage account equals your cost basis. To your cost basis equals your fair market value of your brokerage account. So that way, when you sell, you don't have to pay any capital gains tax. Because before, you were paying capital gains tax on $100,000 if you wanted to sell that brokerage account. Now, you're using this strategy. You're giving money to church or charity, which you were already doing in the first place, and you're buying back the stock with the cash that you would have given to the church or charity. And what you want to do here, by the way, is ideally, let's say I own Apple stock when it was $50 a share and now it's $200 a share. I want to donate that stock because it's got the highest fair market value to cost basis. It's got the highest capital gain. But then I want to rebuy those same shares because now I'm basically getting a step up in cost basis on my Apple stock. So that way, when I go to sell that Apple stock, if I bought it for $250 and it's worth $250 and I sell it, I don't have a capital gain. And so you can implement this strategy, and you could do this. It's a multi-year strategy. It's definitely not a 2-3 year thing. But if you have a brokerage account that's sitting on gains, or maybe it's not sitting on gains, but you just want to reduce your overall tax exposure. If you're already donating money to church or charity, this is going to be an amazing strategy because, hey guys, just wanted to interrupt the podcast today to let you know about my Facebook group, Tax Strategies for Real Estate Investors. We have over 6,300 real estate investors in the community actively engaging every single day. You're going to learn all my top tips. You're going to get to network with other professionals, and you're going to get to see all the past recordings and all the past posts in that Facebook group. So make sure you join today. It's going to be linked in the podcast below. And now back to the show. If you're already donating money to church or charity, this is going to be an amazing strategy because all it takes is a couple extra steps for you to set this up in order to get more favorable tax treatment, right? Because for this person, let's say it takes them 4 years to implement this entire strategy through and through. You know, they're going to save $15,000, $20,000 in taxes over 4 years by implementing this strategy. And again, they're not really doing much else. So if you have a taxable brokerage account and you are contributing money to church or charity already, and you're not doing it in this tax efficient manner, you are doing yourself a disservice. You are losing money in taxes. You could be saving more money in taxes and put your hard-earned money to work, whether that's through yourself or the church or charity, and not to Uncle Sam. And again, if you have a taxable brokerage and you're doing charitable giving, you need to be using this strategy in order to save money on taxes. That's going to wrap up today's podcast. So if you are still unfamiliar with the taxable brokerage account and how that works, I'd recommend you go check out the couple podcasts previously on the taxable brokerage account. It's going to give you that overall strategy. But this is amazing platform and strategy if you have a taxable brokerage and you're contributing to charity. Make sure to also check out the Facebook group, Tax Strategies for Real Estate Investors, where we have over 8,400 real estate investors in there posting and engaging daily.